Hi everyone, this is Al Brooks. I want to do a quick summary of the trading today up to 9 o'clock Pacific time. And we had on Friday a small pullback bull trend day that lasted all day. And Friday was the last day of the week, last day of the month. And on the monthly chart, March was a buy signal bar. We've had lots of bull bars recently closing on their highs on the monthly chart. Chances are the month is going to go up at least a little bit. We've been alternating since last year back here. Back in August, it's been bull, bear, bull, bear, bull, bear. And then we had two bears here, two bulls here, but every month has been alternating. A good looking buy signal bar there, here, here, here. Chances are we're going to go above the high of the bars. So it was likely that we would go above last month's high today or early this week. And we went above it today. I think we're going up to the August high. I've been saying that for many months now. I think this is a first leg down from a buy climax. And I think we'll get a lower high and some kind of a double top, maybe with the August high, and then a second leg down. We had a gap up in April 2021 above 4,000, an acceleration up, clearly an important price. And then we've been oscillating around 4,000 now for 16 months. So clearly an important price. The all-time high is important. And two important prices often create a third price. A measure move down from the high to 4,000 takes us down to around 3,200, which is below the pre-pandemic high. So I think at some point in the next few months, we'll form a lower high and we'll get one more leg down, breaking below this low. What are the chances that we just go straight up to a new high? I don't know, maybe 40% that will just go straight up to a new high. And if we do get up to a new high, we've had so many reversals here. This is trading range behavior. I think there'll be sellers around that high, a little bit above, a little bit below. So if we do get to a new high, I think we'll have a hard time going much above it. I think we'll get a reversal back down at least to the middle of the developing trading range. On the open today, we had a bull bar closing near its high. When you have a buy climax day like Friday, there are a couple things that you should know. First is there's a 50% chance that you're going to get some follow through buying on the open, and bar one is consistent with that. But there's a 75% chance that by the end of the second hour, the market will go sideways to down for at least a couple of hours. So that is what's likely. So here we have a bull bar closing near its high, but we know whatever rally we get will last 5 or 10 bars, probably not much more than that. So you have to be prepared to get out fairly quickly if it starts to reverse, because we might get a leg all the way down here. This was an area of agreement on Friday, and if this does not go up too far, this would be within reach. The market, bulls bought at the moving average here and here and here and here and here, and they're buying just above the moving average here. Possible low of the day, but I think we're going to end up having at least a couple hours of sideways trading at some point, again, starting before the end of the second hour. If you buy above bar one, it's reasonable. Stop below one, I would trade small and add on as it goes up. For example, you buy above two. Now, that's a surprisingly strong pair of bars early in the day. It's always in long. It's strong enough to buy the close. Traders will buy the close, they'll buy at the market, and they'll buy above it. We went a little bit above it, and then we had a bear bar closing near its low. And if you're long, for any reason, buying above one, buying above two, and it goes below three, I would get out, because then we have a buy climax from yesterday and a wedge, 1, 2, 3, and a good sell signal bar. And this could be a bull trap on the open and the start of a trend down from the high of the day. And so reasonable to exit below three. And three is a disappointing bar. So some of the bulls who bought the close of two will try to get out break even if it gets back to the close of two area. And it did. Bar four, we went far above the close of two. So instead of bulls getting out, bulls bought more. And that's good. It increases the chances that we'll go higher. This might be a gap. It might lead to a measured move up. So it's still by the close. Traders are still buying at the market. And then bar 5, it's a problem. It's a bear bar closing near its low, and it's a good sized bear bar. It's reasonable to get out below 5. You can always buy again if you get a bull bar in the next few bars. So reasonable to get out of longs. It's 5 bars without a pullback. You can argue wedge, but 5 bars without a pullback. Probably this is a minor reversal, and there probably will be buyers not too far below 5. So I would wait for a second sell signal and not go short below 5. 6, for the bulls, it's a high 1. It's a very strong bull trend, a small pullback bull trend, but it's a bear bar and it's consecutive bear bars. So that is not a very good high 1. Bar 3 is not a very good high 1. It was a sideways pause in the bull trend, but it's still a buy signal above 3. They bought above 3, they bought above 6. When you get bad buy signal bars in a bull trend, it reduces the chances that the bull trend will last all day. It increases the chances that you'll get a reversal, at least into a trading range. And that's consistent with what we already know. The day after a buy climax day has a 75% chance of having at least a couple hours of sideways to down trading. So we're still in a small pullback bull trend, but not good buy signal bars. That increases the chances that we'll get a reversal before too long. As I said, maybe 5 bars, 10 bars, maybe a little bit more. And now we have another high 1. 8 is a pullback in a small pullback bull trend. No sign of a top yet, but it's a bear bar. So we have a bad buy signal bar 3, 6, and now 8. It's still a small pullback bull trend, so traders will buy for any reason. They'll either buy above a high 1, a bad buy signal bar, or they'll buy at a new high. So they'll buy with a stop above that. If they don't want to buy above a bear bar here, they'll buy with a stop above that. And so far, the bears are not making money. Limit order bears, if they sold at the 5 high, it had to fall 22 ticks for them to make money, and it did. Each line is 5 points. It fell a little bit more than 5 points. So now limit order bears are starting to make money. And that increases the chances that the market is transitioning from a strong bull trend into either a weaker bull trend or a trading range, and less likely into a bear trend. Another bull bar closing near its high. So if traders get out for any reason, they buy again above 8. 11, 3 consecutive bull bars, all closing near their highs. So the first reversal down will probably be minor. I would not short below 12, but if the stop order bears start making money, if the market falls far enough below the low of a bar for bears to make money, a scalp, then I would get out. So if it falls 22 ticks below 12, stop order bears could make 20 ticks, 5 points, I would get out. And it's a high 1, but as I said, we're probably not going to go up much further. So if you buy, I would be really, really quick to get out, because as I said, we should be soon having a leg down, or at least sideways, lasting at least a couple hours. And this is extremely overbought. Bar 13, an outside down bar, but a small pullback bull trend and a tight bull channel. So I would not short below 13, but if I'm long, I would get out, similar to getting out below 5. You can always buy again if 14 or 15 is a bull bar. Instead, 14 was a surprisingly big bear bar, and it's a bear surprise and a buy climax. Different ways to look at this as a wedge: 1, 2, 3, 4, 1, 2, 3, or 1, 2, and then 3 subdividing into 1, 2, 3. In any case, we know we're going to have a couple hours of sideways to down trading, 75% certain, and this is a really good looking bear bar. So it's probably the start of a sideways to down move. It could be simply sideways, but we'll probably get at least 2 legs down after a bear surprise and a buy climax. So traders will sell the market, sell out of longs, sell into shorts, or sell below 14. 13, 14, we have consecutive bear bars, one being big and closing near its low. So it's sell to close. It's still probably a minor reversal, but it's sell to close. I would not buy at this point. Another bear bar, 15. Now we have 3 consecutive bear bars, one of them big and closing on its low. We should get a couple legs sideways to down. So better to be short or flat. And if you're short, you can get out above 13. And now we have another bear bar, 16, closing near its low. So right now it's a sell the close market. We have a close below the moving average. We closed the gap between the 6 low and the 3 high. So more and more bulls are giving up. We have a small spike pullback channel, and we're closing below the bottom of the channel. So it's probably going lower. So you sell the market or sell the market as soon as 16 closes, or you sell with a stop below 16. 17, it's another very good bar for the bears. So same thing. Sell the close, sell the market, sell for any reason. Now, every day has a 90% chance of having at least one swing that goes 40% of an average day's range and comes from a good signal bar. On the way up, we have a good buy signal bar here. So is this going to be the start of a move up? Well, this high is 76 ticks above that. And if the average day's range is 50 points, 40% of that is 20 points, which is 80 ticks, and it will have to go 82 ticks above 1 for the bulls to make 20 points profit. And this is 76 ticks above. So the bulls have bought above 1, hoping that this would be a swing trade. They gave up on 14. 14 is a really good bear bar and a good candidate for the start of a swing down. So it's reasonable to sell below 14 on a stop and try to get out 80 ticks below your entry price. So you enter 1 tick below 14. You need 80 ticks to make your 20 points. And if you're exiting with a limit order 80 ticks below your entry, it has to go 1 more tick. So you enter 1 tick below 14. It has to fall 81 ticks more for you to exit with 20 points. So it has to fall 82 ticks below 14. So a lot of bulls will place limit orders to get out. A lot of bears will place limit orders to get out at 82 ticks below 12. And right now it's sell the close and looking good. It's still sell the market, sell the close. If you traded small, you could add on here and add on here and add on here. We may get some bounce around the earlier low of the day. The bulls are hoping that we get a double bottom in a rally, but this is so strong. It's a major bear surprise at this point. A bear surprise increases the chances that you get at least a small second leg sideways to down. A major bear surprise increases the chances that the day will either be a trading range day or a bear trend day. So this could be a spike and then we could bounce and get a channel down, or it could be a sell climax and we could rally back up to the high and then just go sideways all day. A doji bar in a sell climax. That is a neutral bar. The bulls equaled the bears, pretty close to being equal. So it's probably getting close to the end of the selling. And as I said, there'll be bulls buying back, there'll be bears buying back shorts, 82 ticks below 14. The bulls know that, so bulls will start scaling into longs, betting that we'll get a bounce pretty soon, maybe a bounce to 50% of the way up. Another sell the close bar, but a tail, and it's after that doji bar, and we're getting pretty close to 82 ticks below 14. So I think it's probably better not to sell the close, even though arguably you could sell the close. I would wait. And then 20, I think we're 76 ticks down from the high, just like this high was 76 ticks above that. This low is 76 below the sell signal bar, 14. Probably sellers above 21, but we're right at a profit-taking area, so I don't want to short, and I don't want to buy the first reversal up. And then you get 22. It's a pretty good bull bar closing near its high. A bull surprise probably will lead to at least a small second leg up. And it might go to 50% up, which is this pink line. It might test yesterday's high. It probably is going to get at least to the moving average, and we'll probably get at least a couple legs sideways to up. So I would wait to sell. And for the bulls, they can argue it's a failed breakout below the low of the day. Some computers will see it as a lower low double bottom with 1. Others will see it as a higher low double bottom with 77. if you buy, I would use a wide stop, like 10, 15, or 20 points down and scale in lower. And most traders will mess that up. So most traders are better off not scaling in. So if you buy, you put a stop below 21 and hope that it's the start of a swing. It's probably the start of a trading range. It could be a brief trading range and will form a bear flag and then get down to 82 ticks below 14, or it could, it could go up 20 or 30 bars and then try to go down later in the day. Okay. Now we have 5 bars, 6 bars up without a pullback. So probably buyers below 26, but we're getting small bars, a lot of overlap between the bars. This is probably not going to go very far up. It looks like limit order trading. Bears will sell above things, so bears will sell the 25 high and 5 points higher, or they'll start to sell 5 points higher because we're probably going up to yesterday's high. So it's probably better not to sell the 26 high when you know at this point that we're probably going up here, maybe a 50% pullback. So if you're looking to sell with limit orders, I would sell in this area, not right here. And bulls, it's 6 bars without a pullback. We should get a second leg up after 22, so they can buy 26, or they can wait for a good stop entry buy. To me, this looks like the early part of a tight trading range. We have outside up 28, but small bars, sideways bars. It looks like more limit order trading. Sellers will sell above things as it goes up, and they'll buy below things as it goes down. Okay, this is right around 9 o'clock, which is when I stopped the chat room, and I said that we should reach about a 50% retracement. That might lead to some profit taking. Maybe we'll come down to the 28 low. Maybe we'll get down to 76 ticks below this. And it's possible that this is the start of another, maybe we'll get down to 82 ticks below this sell signal bar. Right now, at this point, I think it's likely that we're going to go sideways soon. But sometimes when you have a sell climax early in the day, you reverse up in a small pullback bull trend and it just keeps going up like this. So sometimes here went up a little bit, and then we had this big sell climax, and then we had a big bull bar closing in its high, and we just drifted up. When you get that, usually it does not go far above the earlier high. Sometimes it goes above the high, sometimes it does not. But sometimes when you have these big sell climaxes on the open and a reversal, it can just last all day in a small pullback bull trend. And that's what today did. It went back all the way up to the high. So at this point, it's a small pullback bull trend. It's by the market, by the close, but we're around 50% after a pretty dramatic move. So I think you'll start getting limit order bears selling. I would not sell with a stop in a small pullback bull trend. And to sell with limit orders, I'd like to start to see some bear bars, which we don't have yet. And I don't want to be buying here because this is strong enough to get a second leg sideways to down. And now we're at a 50% retracement and we're at yesterday's high. So there will be some sellers here. And then tight trading range, a high 1 above 36. I'm not going to buy it. Looks like a tight trading range. And then fail breakout below a double bottom 35, 37. I think you can buy it, but if you buy it, you need a wide stop because it may drift back down to the most recent higher low here. Will we get all the way down here? I think it's less certain now. We've rallied for about an hour in a very tight channel, so we may just stay sideways all day, or we may get up here. So it's unclear. If we get down here, there'll be buyers. This may continue in a small pullback bull trend up here, but it's unlikely to go much above. And you can see that's what happened. 21 is a bad buy signal bar. So some bears sold the 21 high and they waited for bear bars closing near their lows and then they sold more, like maybe below 39. And they know there's an 80% chance that they can avoid loss, that they'll be able to get out, at least break even. And so ignore that. Let me get rid of that distraction, get rid of that. Okay. So for scale and bears, if they sold the 21 high and then sold more 5 points higher, 10 points higher, 15 points higher, or they simply waited for a bear bar closing near its low and then sold below it. So you sell one tick below 39, there's an 80% chance it's going to go to the midpoint of your two sells. First sell here at the 21 high, and the second sell below 39, 80% chance it'll go to the midpoint, and that would allow you to get out break even. So, and it did, and it got down there and reversed up strongly. And this is mostly bears trying to get out break even on their trade. And bulls know bears would do that, so you have bulls buying as well, and you have bulls hoping for a double bottom here. And then we just went up in a small pullback bull trend. Actually, went down a little bit more and then up. Second leg down, tough to sell after that. And then here, you can call it a lower low double bottom. You can call it a breakout below this double bottom. Not a very good buy, but once you start to get bull bars closing near their highs, maybe here or here, it's a buy. And then when you start to get 2 or 3 bull bars, it's a buy. And then when you start to get big bull bars closing near their highs, breaking above a lower high, it's a buy. So for the bears, they have a minor lower high here. They have a major lower high here. If we get above that, maybe we'll go up for a measured move based upon the trading range and get up to the high of the day. And here we have consecutive bull bars with decent bodies, with at least one of them closing near its high. This is a breakout above this, so we're going up for a measured move probably. It could be a measured move based upon the height of this range, or it could be a measured move based upon the entire leg up to that breakout point, which gets us near the high of the day. And that's, in fact, where we ended up. And one other point about where we ended up at the end of the day. This high is, this is a reasonable buy. Just like that was a reasonable buy, we went 76 ticks, not 82. This was a reasonable sell. We fell 76, not 82. If a person bought here, they were able to make 4 points. I think it went up exactly 82 ticks right here. It would be hard to hold long. So if you bought that, I think you'd get out below that or that. But you could buy again over here or over here, hoping that it goes up to 82 ticks above that, which it did. Or you could buy above this bull bar closing on its high. If you want higher probability, you buy above this or you buy above that, looking for some kind of a measured move up. Okay, and that is all. I hope everybody had a good day, and I hope you found this helpful.